Good morning, Bob speaking here, 27th of October. I want to go over a few charts here, talk about my best guess for next week looking at the charts here. So we've been in a really controlled downtrend here, but it started to get more wobbly. The ranges started to expand each day, and we might have had basically a short-term bottom here. I'll show you money flow on SPY just to show you the divergence, and the fact that it didn't sell off on Friday meant that people were covering their short positions into the weekend. So below the purple line here, you have to respect that we could still fall. 2635 area again is in play, all the way down to 2593. The ultimate washout would take us down to about 2500. So I'm not expecting that at the moment, but it's in the realm of possibilities. But if we bounce, 2719 is in play here, and then here's the downtrend line, and then if this is short term over, then we're going to take this up to 2760 area next week. But we'll just have to wait and see. I think we'll know more Monday night going into Tuesday. So still no reason to jump any guns here. So that's that. When I want to flip over also to let's see where I want to go next. Okay, I think I want to go to TradingView here. Here's the bond market starting to sell down. That's also going to provide some counterbalance because people reallocate it back into the bonds. And just to let you guys know that I think this is the high for the year, and I think this whole experiment on we got to short the bond market because the economy is doing great, that I think that narrative and that illusion is over. You got to remember, when these guys are spouting off about stuff, they're positioning. They're not informing you at all. And there's no way in a debt-saturated world can anybody keep affording higher and higher rates. It'll choke off the economy. But more importantly, it kills the very people that like to keep their wealth. That's the rich and the bankers. And the banks are not getting the loan books. They're starting to collapse on them. So I think it's be counterproductive for them to keep raising rates. And I think they're going to let Trump / the Democrats just spend money and to try to basically put hot money into the economy from the fiscal side, because it's certainly not working from the loan side anymore. So that's what. Keep an eye on that. I think that's what's going to happen. That'll be gold and silver miners will be a beneficiary of that as that comes into play next year. And then the other thing I want to show you too is also we got a little bit of relent in the dollar. So we had a slingshot hitting here, broke the bottom of the channel here, and it rode to the top of the channel here. This is a big move for currencies. So again, this pressure is coming off too. You got to realize that as the dollar strengthens, there's so much dollar-denominated debt out there that will not get paid, and the people that don't get paid is, guess who? The banks. So they're going to relent on the dollar too. So there's a lot of pressure on the Federal Reserve to kind of walk back the hawkishness. Even though they're going to probably talk hawkish, they're going to do things behind the scenes. My view, they're going to definitely do December because the Fed doesn't want to look like that Trump can bully them. But I'm pretty sure after December it's over, because going into next year, I think we're going to see a much lower stock market, and we're going to have decelerating growth, and they're going to be panicking, and they're going to be dropping. They're going to be dropping interest rates. They're not going to be talking about raising them. You watch. It's going to happen. We're going to have the 10-year back down. I'll bring this back up here. We'll have the 10-year back down here again. Okay. That's without a doubt. We'll drop this 10-year at least 10%, if not more. So don't believe all these people when they talk about, we're we're going to raise interest rates because the economy can absorb it. It cannot. And so I think that part of the risk parity blow up is done. It's still going to unwind some equities, and I think the market's going to go down at least. You know, the SPY, which I'll get to in a second here, is I'll talk gold here first, but I think the SPY is going to get down to, they're going to unwind the whole 2016 risk parity ramp up, the artificial market for the coronation of Hillary, and now this is all going to get unwound. It'll be all unwound in 2019, and then we go into a recession in 2020. So looking at gold here, is that gold has been a beneficiary of all this craziness here last couple weeks, but we're getting a divergence here in money flow. So so I wouldn't be surprised to see gold drop back down to this 114, 115 area before it takes its next move higher. And then looking at SPY, and this is the reason why I think a bottom's in for now, is that money flow has been increasing as price has been falling. That's a divergence, and nice little doji here. And so I'm looking for it to move back higher into this zone, and then we'll have to wait and see what happens. It can drive all the way up to here too. This will be coming down the whole time. So, but we could drive this thing all the way back up closer to you know, like 2,800 on the S&P and 280 on SPY. So just keep an eye out on that. And then last thing I want to show you, I think that's pretty much it. I'll do another video later. I'm going to go through the miners and talk buy areas, because I think now with the market settling, you may see silver and gold drift down, but you'll see the miners start catching a bit again, and also the industrial metals and miners as well. Anyway, thanks for listening. If you want to trade with us, you know, we use our algorithms to give us good buy points, stocks, futures, binary options, and cryptocurrencies. Running a special till tomorrow night, and really some cool packages we put together for you guys. I'd like for you to join us if you want to. Thanks for listening, and I'll be back with some more videos later. Bye-bye.